Let's go, let's go. Q4 mortgage and real estate market update. Teresa Timms, President, TDR Mortgage and Real Estate Group. The biggest news this week in the market is the loan limit increase. It's huge news to those people in the Inland Empire that do not have access to high balance loan limits. Let's get started. Let me break that down. Nationwide conforming loan limits are 548 to 50. When you go over that loan limit in the Inland Empire in San Bernardino Riverside County, it becomes a jumbo loan. Not anymore, because the loan limits just went up to 625 nationwide effective January. However, your friends at TDR Mortgage can originate and close these loans now with some of the lending partners that we have. Now, what's cool about that is you can purchase up to 644 sales price with just 3% down now. That's right, 3% down. And 655 with 5% down, and 694 with 10% down. So this is just what the doctor ordered for the Inland Empire. We've been long suffering with high prices and not having access to lower down payment loans has been quite a burden for many people. So I expect this to continue to drive our affordable market through the end of the year and into next year. Okay, so 548 to 50 conforming loan limit. Then you have the high balance loan limit for those areas that HUD deems high cost, such as San Diego, Orange County, LA. So they can go to Orange County and LA can go to a high balance loan limit with 5% down on a high balance loan. Well, now with those high balance limits are going to change too. I don't have a number yet, but I'm kind of thinking they're going to go up into the 900s. So we can take all of those people that are in current jumbo loans and refinance them at much lower rates with this new loan limits that are coming out in 22. The conforming loan limit, we can do those now, so keep that in mind. The state of real estate, we are still in an inventory crisis mode. We've never had less homes on the market than we do right now. And while we're seeing a slight demand waiver, whereas in the summertime you would have a property hit the market, let's say it came on the market 700,000, 550, 7, 8, more like 800 in OC, 550, 600 in the Inland Empire. You would have 50 showings, 20, 30, 40 offers. It would go way over asking. What's happened right now is more recently you put a property on the market and you price it, kind of toward the top, where all the comparables are, and it's not flying off the shelf. Maybe the first week you only get one offer, maybe the second week you get 5 offers. That's a bit different coming off of what we came off of in the summer, right? Multiple offers. And if your buyer just didn't have the extra, 50, 100, 200,000, they weren't able to get out there and play in the real estate market. Well, now what we're seeing is maybe we're getting 5 to 10 offers. They're not offering way over asking. A tactic that a lot of real estate people are using right now is one where they're going to go in and look at the sales comparables, and instead of pricing at the top of the market, they're going to price it 5 to 10% below market to garner interest and to get more activity, get more offers, and get over that price. So that's a strategy that a lot of agents I'm seeing right now do. When I'm looking at the inventory on the multiple listing service, that's the realtor's database of homes that we use to list homes. What I'm seeing that's pretty incredible is I'm seeing price drops everywhere, and you see these arrows, these colored arrows. And what's happened is a lot of realtors would go and take a listing and pretty much kowtow to the seller. The seller thinks, hey, I want, 800,000 for my house. And in the past summer, this past year, an agent might take the path of least resistance, put it on 50,000 over, knowing that he or she might just get it. You can't do that anymore. Pricing out of the gate is the most important strategy that any seller can use and any listing agent could use to their advantage in this market. Let's see. Okay, so that's basically the state of the real estate market. Everyone, literally every indicator, every real estate guru, all the data is showing that demand is going to continue to be high through the end of the year and into next year. And that's simply a supply and demand issue. We do not have enough homes for all of the people that want to buy homes. Let's talk about rates. That's fun, right? Well, it is, because the rates are still nice and low. I'm seeing 15-year loans, you can get anywhere from like 1.75 to 2.25. It just depends on whether or not you want to pay points to buy the rate down. 30-year fixed are coming in around 2.8 to 3.1, depending on your equity position and your FICO score. One of the biggest things right now for people to take advantage of is their equity gains in terms of using that position to do a cash out refinance and do home improvements. Because there is a shortage of inventory, there's not a lot of places to move up to per se, or you have to make a pretty big move up to make it worth it. If you're moving out of a $600,000 house, it's not worth it just to move up to a $650,000 house. And in most cases, you would have to move up to $750,000 or $800,000. So what a lot of people are doing is they're using their equity gains and converting that into low cost capital. So you can get a home equity loan at 5%, 5.5%. A lot of them have intro rate specials at 2.5% for the first year, something like that. But that is adjustable money. And if you're taking out a big chunk, you definitely want to look into, can I get access to $100,000? Can I make my home into a castle? Maybe you're doing a lot more working from home. Maybe you're doing homeschooling and continue to do homeschooling in light of all of the things that are going on right now in our economy, in the political scene. And doing a cash out refinance is something that definitely makes sense for a lot of people because the cost of the money is so low. Again, depending on your equity position and depending on your credit score, we're seeing those loans at 2.75 to 3.1. So a great opportunity and great value for your money. We're also seeing a lot of people convert their 30-year, maybe they've got 27 years. Take it down to a 20-year. Prep yourself for retirement. Take it down to a 15-year if your loan balance is low enough and the payment's manageable. We have a lot of people doing that with great success right now. One more thing I want to touch on. A lot of people are doing cash out to do an accessory dwelling unit. The accessory dwelling unit process has been completely revamped. It's much, much easier if you can find contractors to hire right now, right? There's definitely a labor shortage in California, Southern California especially. But the ADU is a fantastic way to add value to your home, add square footage, add cash flow if you saw fit to rent it out. So we have a lot of people taking advantage of the ADU stuff. The future, what does the future hold for us? I wish I had a crystal ball. But the uncertainty of the political landscape, of the economy, is one such you can't say this is going to happen for sure. One thing I do know is that all of my gurus, all the economic gurus, all the mortgage gurus that I follow are saying we will 100%, 22 or 23, fall into a recession. I mean, eventually, things go up and things go down. And when that does happen, they're saying that we will see the lowest rates of our lifetime. And they are all predicting rates in the ones. So I hope to see that. I think it would be an amazing thing for many, many people to take advantage of. But remember, right now, our values are very, very high. And when you're accessing capital, and you have a high equity position, you are rewarded by a few things, right? A lower rate, access to a lower rate, lower cost rate, and also we're getting a lot of appraisal waivers. So I would say in about 70% of our files, whether they're cash out or not, if we have somebody that has relatively low risk factors, they have equity, they have great credit, they have money in the bank, most of the time, we don't even need appraisal waivers. If we get a file and we have to do an appraisal, it's kind of like, wah, wah, wah. We have to do an appraisal. We can't close it in, 2 or 3 weeks. So that's what we're looking at right now. Real estate market's still strong. The conforming loan limits going up, and we're able to do those now. Fantastic news, amazing news. We're so excited to help a lot of families. Rates, gosh, what can you say about, rates in the twos? Oh, also a lot of the non-traditional loans, bank statement loans, no income loans, debt service loans, where we can refinance people into the threes on investor loans. If you have a house that rents for $2,500 and the payment is $2,500, we don't need any income documents at all. So this is a real product. There's some really great things out there for self-employed people right now in this non-qualified mortgage space, and we are absolute experts at that. I hope you found some of this information useful. If you have any questions or need anything, please don't hesitate to reach out to me personally. I'd love to help you. Cheers to the rest of 2021.